Hello everyone, my name is Kaseem. Welcome to the channel. In today's video, we are going to walk through Tesla's earnings call. I want to start doing this, every time Tesla drops their earnings. If I can't do a live stream, I'm going to get the audio afterwards, listen to the whole thing and make commentary on it and, share it here with you on YouTube. So in today's video, we are going to go over the earnings call. We're gonna start the earnings call like right now. I'm just saying that up. So I hope you enjoy this. As an investor, I think it's important to always like you. I know a lot of people cannot listen to every single company they invest in. They cannot listen to all the earnings call, but at least your top five that you have most money in, you need to know what those companies are up to, so that way, if the stock goes down, it gives you have more conviction to buy when the stock goes down because like what the company is up to. Unlike other investors that don't listen to their earnings call, they don't listen to what their team have to say about the company and everything like that. So that's what I'm trying to do here, trying to show you guys how to not only invest, but how to try to make money in the stock market, how to invest for the long term, and what you should really do as as an investor, as someone that invests in stock, some of the things that you're supposed to do. And listening to earnings call is certainly one of them. So let's get the show on the road and listen to.
Yeah,
Sounds
and
good.
basically, this is just a guess because we don't know for sure, but it appears as though we're about 12, probably not more than 18 months away from volume production of the 4680. Now, at the same time, we are actually trying to have our cell supply partners ramp up their supply as much as possible. So this is not something that is too.
That's the thing. Tesla is basically creating their own batteries and they're ramping that up. They build their own battery from the ground. They're ramping it up to getting it up to production level. So the thing is constantly producing battery all throughout the year. And at the same time, they are saying that, look, listen, everybody from all over the world that makes battery, we want all your battery, everything. If you can sell everything to us, we want everything. We'll give you 2 years, 3 years, 4 years contracts in advance. We want everything.
The exclusion of suppliers. It is in conjunction with suppliers. So yeah, we want to be super clear about that. This is not about replacing suppliers. It is about supplementing suppliers.
You hear that? They are not trying to replace their suppliers. They want to supplement them. So Tesla is going to be they're building their own battery, like I said, and they want more battery suppliers like Panasonic, Toshiba, all these companies, CATL. They want them to keep on producing batteries and shipping the batteries to them.
So we have a very strong partnership with CATL, with Panasonic, and LG. And our request to our strategic partners for cell supply is please supply us with as much as you possibly can.
There you
go. Provided the price is affordable, we will buy everything that they can make.
Good.
Yeah, and
this is the company that we are investing in, guys. First of all, they're the leader in electric vehicle. They're creating their own batteries. They're telling everybody else, listen, we will buy everything. We'll buy all the batteries that you have. We'll give you 4 years contract in advance. Make all the batteries, we'll buy it. That means Tesla have confidence in the product that they're making. They have confidence in the demand for their products. This is a once in a lifetime, investment for so many people. People just don't realize it yet. All this the kind of thing is always funny to me that people don't read between the lines and are able to infer and think for themselves, but they just anyways, let's just keep on listening.
Specific to that, we're on track to more than double the supplier capacity over the next 13.
Yeah, and that's the other thing. That's the other thing. Tesla is helping their suppliers build more battery as well. So that's the other thing that they're doing.
Exactly. We do expect from suppliers willing to receive double the cell output next year versus this year.
Yep.
Okay. And I had a quick follow-up on maybe Zach for you on your energy business. So I understand like the negative gross margin with solar roof RAM, but I was wondering, what do gross margin look like there when you look at the storage business, and where what's your ambition in terms of gross margin in that business? As I guess it's going to grow in the mix in coming years. So it's important for long-term modeling.
Yeah, we're seeing a lot of.
We're aiming for comparable margins in storage as in vehicle, but it is important to bear in mind that vehicle is more mature than storage. So
that is true.
We already are at good margins with the Powerwall, but some additional work is needed for the Mega Pack to achieve good margins. Yeah, Drew, what do you think?
Thank you.
Yeah, sorry, just jumping in, Elon. Absolutely agree. Yeah, Powerwall is mature. We've been producing Powerwall 2 for 3 years now, and we're at good margins there. But Megapack has more room to go to achieve our target.
So
we have a clear runway for improving the cost per the megawatt hour of the Megapack.
Okay. Absolutely, yes, we do.
Good.
Thank you. Let's go to the next question, please.
From Rod Lackey with Wolfe Research, please go ahead.
Hi, everybody. I was hoping maybe just first you could talk a little bit about how you're thinking about the rollout of version 9 of FSD and the transition to the subscription model. It sounds like some of this is about to roll out next month. I'm not sure if that's the subscription model, but maybe you could just spend a little time talking about how impactful you expect that to be.
Sorry, go ahead, guys.
Yeah, we're working on getting FSD subscription out. There's a couple of internal technical dependencies, but from a business model perspective, that's aligned, and we're hoping to roll that out soon. The key thing that I say here, there's a lot of potential for recurring revenue based on an FSD subscription. If you look at the size of our fleet and you look at the number of customers who did not purchase FSD up front or on a lease and maybe want to experiment with FSD, this is a great option for them.
Of course.
One of the things we'll need to keep an eye on is a potential transition from cash purchases of FSD subscription over to, or cash purchases of FSD who may move over to FSD subscription. And so there could be a period of time in which cash reduces in the near term, and then as the portfolio of subscription customers builds up, then that becomes a pretty strong business for us over time. Okay. But we're hoping to get this launched pretty soon, and see what the response is to it.
Okay. Okay. Great. And was hoping, Zach, maybe you could just talk a little bit about OpEx. There was a noticeable
OpEx
increase.
Is operating expenses.
Even excluding SBC, obviously a lot going on this quarter, but can you maybe just talk a little bit about how we should be thinking about that going forward?
Sure. On the R&D side, what we're seeing, as I mentioned in my opening remarks, is kind of a convergence of a series of programs that are happening, and our R&D OpEx spend kind of correlates to where we are in the product life cycle on different programs. And so we're kind of at the tail end of investments in what we call internally Palladium, which is the new Model S and Model X. And so we expect that to decrease over time, but it was high in Q1 for a lot of the reasons that Elon had mentioned. We're also getting very heavy into 4680 development that Drew and team are working on, and the associated structural battery pack that goes along with that. And so these are new technologies, not only new to Tesla, but new to the industry. So we're investing heavily there on an R&D side to work out those kinks. And, spend along in those areas, should continue over time as we continue to work through the development cycle of those.
Sure.
And then I also mentioned, Elon talked a bit about, Dojo and the potential there. So from neural net investments and custom silicon investments, these continue to be areas that we spend on and make investments in.
Great. Good.
On the SG&A
Spend that
side,
money.
the business is pivoting very quickly to be global, and China is ramping quite quickly, and we're trying to make sure that we are staying ahead of the volume, so that we have the right sales capacity, store capacity there, local investments in IT and others to manage the growth, such that as the growth comes, the execution challenges are smaller than maybe in similar periods of growth that we've seen in the past.
Okay.
And so we're making investments there ahead of the growth. And overall, as we look at OPEX as a percentage of revenue over the course of the year, we do expect to see a substantial drop from 2020 to 2021 as the volumes in the latter part of the year pick up.
Okay. Makes sense.
Thank you.
What he's basically saying that is that over time, the expenses that they have to spend on research and development, all the money that they need to spend in order to get the products out and constantly improving the products, it's going down over time. So it's great, But you do want companies that you invest in. You want those companies to spend a little bit more money into research and development. You want them to spend money in research and development, because when companies spend money in research and development, they can discover something new. They can discover a different way for them to operate. They can discover so many different things, So, I have no issue with companies that I invest in. I have no issue in them spending money on research and development. I think it's actually a great thing when companies do that.
Let's go to the next question, please.
Thank you. From Dan Levy with Credit Suisse. Your line is open.
Okay.
Hi. Good evening. Thanks. Two questions. One is on COGS. I think we've gotten from Battery Day a pretty good feel about the potential for COGS reduction related to powertrain, but I'd like to get a sense of the path to reducing COGS X powertrain, as you'd still need a meaningful reduction on that front to make the math work on a $25,000 vehicle. So what levers do you have to reducing your cost X powertrain? Is it just more scale, better supplier pricing, or is it just based on ongoing cost reductions?
Technokin, let's hear from you.
Sure. I think all of the above.
Okay. Cool.
Yeah, on the vehicle side, there's plenty of opportunity as well. Obviously, building a car like a Model S is quite complex and has various moving parts. Model 3 and Model Y were steps of improvement in that. But when you look at some of the other advancements that we're including in the Model Y factories into Austin and Berlin, we've reduced the body part count by as much as 60%, and the part costs money. So we continue to find optimizations there, as well as we get economies of scale when we start to talk about the volumes we're considering worldwide with 4 factories building the same vehicle. So both of those things on the vehicle side will improve our COGS as well, and the powertrain continues to be integrated into that.
Great. And then just related, as we see Berlin and Austin ramp, I'd like to just get a sense on the comparison of Fremont versus the new capacity. Obviously, Fremont's non-optimized because you bought, the old NUMMI facility. You had to retrofit that to your needs. So maybe you can give us a sense of how your new capacity is going to differ versus Fremont. What are the areas that you have efficiencies that you previously didn't have? And maybe, how much does that add up to improved COGS over time to help you achieve that $25,000 vehicle?
Is a good question.
Yeah, I don't think we don't want to talk too much about future product development. The earnings calls are not the right place for make major product announcements.
Sure. Fair enough. That's
So
fair enough.
yeah,
It was just trying it, but
we'll
it was a
get
good
there.
question. It was a good question. They'll answer
We'll
eventually.
talk about it later.
It makes sense.
Oh, all right. Thank you very much. Unfortunately, this is all the time we have for today. Thank you very much for dialing in and for listening. And we'll speak to you again in about 3 months.
All right.
Thank you.
All right.
This
So
concludes today's conference.
let's end that right there. So to me, that sounds like a very, very good investment. That what I just got from the call, let's just go over it. So they basically solving real world AI problems. This is from my notes, a few things that I got jotted down. They're solving real world AI problems. The Model 3 is the best selling car, period. Best selling sedan, period. And their Model Y is going to be the best selling car moving forward. All right. They're working on their Dojo system. And the Dojo system is basically the car has a bunch of cameras around it. And then they build their own computer chip that they build into the car. And the computer chips process all the image and tell the car what to do. So processing those image and labeling those images, they used to have people doing it, human beings doing it, and telling the computer, hey, this is what this is, this is what that is, this is what this is. Now they're training the computer to do that. So the Dojo system is improving. What's the next one? They talked about the solar roof. They talked about Tesla selling Bitcoin. They sold 10% of Bitcoin. They talked about like superconductor. I have to research that more. They talked about the energy business. They talked about FSD. So this call was a very helpful call as a Tesla investor. Again, I personally still feel like the company is still not matured yet to get to a point where you're gonna sell the stock. If you own the stock right now, it's just to be accumulating, because we have factories in Germany, factory in Austin, Texas. They're coming out with Model S, Model Y, Plaid, Cybertruck, semi-truck. This company is just starting on their journey. This is a great investment. Anybody that is investing in Tesla, that you don't listen to Tesla's earnings call, you are doing yourself a disjustice or whatever. You should be listening to Tesla's earnings call. Anyways, with that being said, appreciate you for watching the video. I know this is a long video. I appreciate you for watching the video. If you like this kind of content, consider subscribing to the channel. I do this pretty much every week. I post on this channel every week. So if you like this content, subscribe. I do my Tesla update every week and a half, which I show you how my Tesla portfolio is doing. And I go with a basic premise of investing $20 every day, which is $100. It's about $400. It's about $400 per month that I invest into Tesla stock on a daily basis. So I don't. It's not a lot of money. I think a lot of people can afford to do $20 a day on a great investment like this. So anyways, all in all, this has been a great earnings call. I've learned a lot more about the company, and I'm going to keep on doing some more research like I do pretty much all the time. And listening to the earnings call like this is part of that research. Keep on doing those research and just trying to gain a little bit more knowledge into what the company is doing. So whenever the stock goes down like crazy, I jump in and buy a little bit more and just over time grow my wealth as a company grow as well. So yeah, thanks again for watching. Appreciate you for watching. Until next time, see you later. Love you all. Bye.